In this video, we're going to show you the best way for South Africans to easily move your money offshore to protect your savings from the weakening rand. But here's the really interesting part. We'll show you ways that you can get offshore exposure without your money ever leaving South Africa. And you can invest for as little as only 5 rand. Now, as South Africans, we're faced with a growing number of challenges every day, especially on our pockets. The financial impact of load shedding, fewer jobs, increasing taxes, or the ever-rising cost of living. Life is tough, and it's a constant struggle to make ends meet for many South Africans every month. But one of the biggest issues we all face long-term is the weakening rand. The rand has lost over a third of its value to the US dollar in the past 5 years alone, and the situation looks more and more grim the further back in time we go. The more the rand weakens, the more pain we feel. Ultimately, everything gets more expensive as a result, whether it's car prices, the cost of fuel, or our grocery bills. And let's not even talk about overseas travel. So what can we do about it? Well, in this video, we'll be discussing 4 of the best options you have to protect yourself against the weakening rand. The offshore options we discuss become more and more profitable as we go, so make sure to stick around until the end for the solution that offers the best rand hedge and return on investment by far. Okay, let's get right into it.
Now, the first option you have is to buy foreign currencies, or in other words, invest in a stronger currency like the US dollar. Most of the big banks have a foreign currency investment account that you can use to quickly convert rands to your foreign currency of choice. And some of them do actually pay you a small amount of interest on these foreign savings, depending on which currency you've chosen to invest in. Now, this is a pretty easy solution to get exposure to offshore currency. These accounts have very low opening balance requirements, and all you need in most cases is an existing transactional account with the respective bank. But here's the thing, although buying dollars is the popular option, and the banks make it pretty easy to do so, it only solves half of the problem. There are actually 2 separate risks that you need to plan for: exchange rate risk and inflation risk. If you convert your rands to US dollars, then sure, you are hedging yourself against the exchange rate risk, and this is a great first step, but it ignores an even bigger problem. If you only leave the cash to sit in a bank account, earning minimal interest, inflation is still going to whittle away the value of your cash over time. You will lose purchasing power on the money, just at a slightly slower rate than before. You've at least hedged yourself against the rand losing value, but cash savings is still a terrible long-term investment because of inflation. So let's see how we can address this issue in the next 3 options.
Option 2 is to buy gold, and there are a few different routes you can follow here, each with pros and cons. Either you can buy physical gold bullion like gold bars or Kruger rands, for example, or you can buy the paper asset in the form of gold stocks. Whichever option you choose, your gold investment would act as both an exchange rate hedge and offer protection against inflation long term. This is because the global gold market is denominated in the US dollar. So when you buy gold using your rands, you are essentially converting your rands into a dollar-denominated asset. This means that when the rand-dollar exchange rate weakens, your gold goes up in rand value and you make money, even if the price of gold does not move. But over the long term, hopefully the dollar value of gold does actually go up too. And this is where our protection against inflation comes from. The value of the asset itself is increasing. So you can see that there are 2 mechanisms at play here: the rand-dollar exchange rate, which changes, and the dollar value of gold itself, which changes. Both mechanisms cause the value of your gold priced in rands to go up over time. Once you understand this, you realize it's pretty pointless to buy and hold foreign currency for any extended period of time, when you could rather hold a dollar-denominated asset which can actually go up in value over the long term. So should you buy physical gold like Kruger rands or gold stocks? Well, personally, we always prefer holding the underlying asset, the actual physical Kruger rand in this case. There are of course some risks to be aware of, such as the risk of transporting and storing the Kruger rand safely. But the benefit is that you can verify that the physical asset is actually yours and maintain full control over the investment, since you can literally hold it in your hand. You also don't need to send your money overseas to protect your wealth and get an offshore hedge. You don't need to give up control or incur costly forex fees or take unnecessary third-party risks. Your money is in your hands. Owning physical gold is like owning the dollar, but with a built-in value appreciation mechanism long term. There are, however, some benefits to owning gold stocks, such as ease of ownership, lower purchase costs, and no transportation or storage risk. If we take a look at the new gold ETF on the Easy Equities platform, for example, you can see that it has performed quite well over the past 5-year period, returning an average annual growth of over 15%. And the benefit here is that you can start investing with as little as 5 rand if you like. Whereas a physical gold Kruger rand will set you back around 4,700 rand for the 1/10 ounce coin, which is the smallest coin available. But if you are ready to buy physical Krugerrands, be sure to buy from a reputable dealer registered with a South African mint. We'll put a link to the list of authorized dealers below.
Now, the third option you have to invest offshore is with equities, in other words, shares or stocks. So either you can buy individual foreign shares like Amazon or Netflix, for example, or you can invest in an ETF which tracks the movement of a foreign index like the S&P 500 or the Nasdaq. In both these cases, you'd be getting a rand hedge since these foreign shares or indexes are priced in the US dollar. And because of this, you'd therefore be protected against any rand weakness. Again, if the rand-dollar exchange rate weakens, the value of your foreign shares denominated in rands goes up accordingly. Now, of course, you also stand to benefit from the share value itself increasing, and some of these shares or funds may even pay out some income in the form of dividends every few months. All these factors make foreign share investment quite an attractive option to protect your wealth over the long term. Now, if you're interested in investing in some foreign equities, Easy Equities is a great platform to use. They're one of the simplest, cheapest platforms out there, and they have 49 different foreign ETF products available to choose from. And the great thing is, you can invest from as little as 5 Rand, making it accessible to everyone. You can use their handy Easy Compare website to do research on all the ETFs on offer, comparing their performance and characteristics side by side. They list the top performing ETFs on the market, and as you can see, the OneVest S&P 500 Infotech ETF has been the top performer over the past 5-year period, returning a very respectable 24% annual return for investors. And in fact, if you look at the other 9 top performing ETFs, you may notice a trend. Every single top performing fund is offshore by nature. They're all investing in assets which are denominated in the US dollar. Now, past performance is never a guarantee of future performance, but the strength of this trend can't be ignored. Owning a rand hedge investment is incredibly important for a South African investor.
So with that in mind, let's look at our fourth and final investment option. We know now that we're trying to protect against both the rand-dollar exchange rate declining as well as the loss in purchasing power of our money due to inflation. Both gold and offshore shares meet these requirements, but are they the best option we have? What if there is another asset class that can offer you a rand hedge against the weakening rand and that has blown the returns of gold and equities out of the water? Yes, we're talking about Bitcoin. Without any shadow of a doubt, Bitcoin has been the best performing asset class of the past decade. Although it can be volatile at times, no investor has ever lost money holding Bitcoin for a 5-year period. In fact, it has returned a massive 330% over the past 5 years, or an annual growth rate of 34% on average. Now, just like with gold, Bitcoin is denominated in the US dollar, and you get the same rand hedge or exchange rate protection that gold offers. Again, a weaker rand means your Bitcoin value goes up, even if the dollar price of Bitcoin does not move. But the value of Bitcoin is on a steady upward trajectory, and it's hard not to believe that it will continue to outperform all other asset classes when there are as many exciting new developments on the horizon. We're talking about everything from countries adopting Bitcoin as legal tender, US presidential candidates openly supporting Bitcoin, huge institutions chomping at the bit for a US Bitcoin ETF, and retail adoption increasing steadily. So is Bitcoin a good hedge against the rand weakening? Absolutely. It's a global currency priced in the US dollar, so you get protection from a weakening rand just by owning it. Does Bitcoin offer good protection against inflation? Definitely. It has delivered the best inflation protection out of any other investment. And while past performance is no guarantee of future performance, the fundamentals have never been stronger.
What about some of the other benefits of Bitcoin over gold and equities? Well, Bitcoin is the ultimate bearer asset. This means that you can own it without any third-party involvement. You don't need a bank or investment brokerage to buy Bitcoin or store it safely. You can send it anywhere in the world at any time of day or night with zero red tape and without needing permission from anyone. You can literally cross any border without fear of confiscation. And you can sleep soundly at night knowing that your ownership as a percentage of the total Bitcoin available can never change. No one can make more Bitcoin like companies do with shares or governments do with cash. No one can find more Bitcoin like we do with new gold deposits in the earth. Bitcoin is the first and only asset that is truly scarce. And this is a breakthrough for both investors and anyone who wishes to reliably store and retain their wealth over time. So how do you get your hands on some Bitcoin? Well, as South Africans, one of the best options for beginners is to use LUNO. You can buy as little as 10 Rand, and those of you who remain skeptical about this new asset class, we suggest dipping your toes into the water with only a very small investment. And then, as time goes on, with your knowledge and confidence growing, you can slowly increase your investment allocation accordingly. We've created a step-by-step tutorial on how to buy Bitcoin with LUNO, including how to get 200 Rand free Bitcoin if you use our sign-up code below. Thanks for watching, and we'll see you over there.